Hey folks, this is Roger Scott, and this is the third of a three-part video series on me. I'm actually answering questions. I'm giving you guys information about me, my life, how it all impacted me, so you can relate it to your life. Again, we could talk about this stock and that stock, but you know what? The stocks are always going to change. The markets are always going to change, but our character, our personality, what got us here is not going to change, all right? It's never going to change. So I've been getting a lot more questions recently about me. So I'm trying to get you guys to understand how it all happened for me, how it all started for me, what the turning points were for me, and what my biggest or most painful lessons were. And I guess we covered those topics in the first two videos. Now in the third video, I'm going to give you the answer to the question I get asked all the time, the most question. I mean, I probably get asked this question 3 times a day. Roger, if there's like 1 or 2 things we can learn from trading, what's the most important thing there is? Like, tell me the Holy Grail, right? And again, they don't ask me, Roger, what's the Holy Grail? Because there isn't one. But you get the question. It's the same type of question. What's your best tactic? What's your best strategy? How did you get to... How do you make money in trading? What's the secret? It all comes down to 2 things. All right, and I know you're going to say, no, it's a lot more to it than that. Well, it all comes down to 2 things. It comes down to positive expectancy of profit and your mind. So, and again, this is one of the reasons why I'm talking to you right now, why we're having this conversation, why I'm giving you this information. Because if you can get the strategy, but if you can't get your mind to work right, it's never going to work. Or if you get your mind to work right, but you can't get the strategy, it's not going to work. They both have to be there. Let me expand on this. What do I mean by positive expectancy of profit? Well, there's a million different ways to trade profitably. You can be a long-term trader, short-term trader, day trader, swing trader, option trader, equities trader, forex trader, futures trader, it doesn't matter. What you need to have at the end of the day is, when I look at your equity run, I need to see that your profits are bigger than your losers, or your percentage of profitability is higher. So you have to have positive expectation of profit. That means over time, you've got to be profitable, okay? I know it sounds weird and people are asking me, how do you do that? Well, that's the catch. There's a million different ways to achieve positive expectancy. For example, let's say you have out of 10 trades, 3 winners only, right? 3 winners, 7 losers, right? You're thinking to yourself, you're a sucky trader. Well, think about something. But what if those 3 winners, you make 10 times the amount that you lose, right? Let's say you make $10 on each of those trades. You made $30. And let's say you lose $15 on the 7 losers. You lose $2, you get out. You lose $2, you get out. 14 or 15. You just made $15 or $16. And you're only right 3 times. Let's say you like to be right all the time. Well, what if your winner is only $2 and your losers are $3? You're thinking to yourself, I can't make money if my winners are smaller than my losers. I've always been taught that my winners have to be bigger than my losers. No. If your accuracy is 80%, for example, and you're only making money $2 for every win, and you're losing money, 2 times 8 is 16. 2 times 3 is 6. You just made $12. Again, I'm simplifying it, but you get the point. The point is, there's a million different ways to achieve positive expectancy. You could be right more often than not, and then your winners don't have to be as big as your losers. Or you can be right 3 out of 10 times. 20%. But if your losers are tiny and your winners are huge, it's easy. I just showed you how to do it. Positive expectancy. If you don't have positive expectancy, you will never succeed in trading. That's not my opinion. That's math. And the only way trading works is math. Think about Las Vegas. They have a slight edge. That edge is positive expectancy. They know over time they will always make more money than they lose. That gives them that edge. So you've got to have positive expectancy. If you want to learn more about positive expectancy, subscribe to this channel. I'm going to do several videos about it. And I'll take my whiteboard and I'll show you a lot of demonstrations, but there's tons of ways to achieve positive expectation of profit, positive expectancy. Now, the last part, your mind. If you can't follow the rules of your strategy, if you're not disciplined to follow the rules that you set for yourself or someone else sets for you, you will never ever succeed in trading. And this goes beyond trading. If you want to be a professional golfer, if you want to be a professional athlete, if you want to be a professional musician, if you want to succeed at something, your mind has to be 100% focused on it. Well, it doesn't work any differently in trading. You need to have that edge. And in order to have that edge, you need to be able to exercise what you need to fulfill to achieve positive expectancy. In other words, you got to follow an action plan. You can't say, sometimes I'll do it, sometimes I won't. This one looks like it could be a loser. This one looks like it could be a winner. No. You have to follow your rules. Your job is to follow your rules. That takes discipline. And the only one who can make you do that is you. So again, folks, positive expectancy and your mind. Those are the two secrets to success. That is the Holy Grail. The kicker is, there's a million ways to achieve it.